Welcome back to another weekly Forex forecast, everybody. As always, we will start with the DXY. I've been saying the dollar came in contact with this weekly demand, and that is why we have seen a push up, and the weekly demand is still in control. However, it is looking weak on the lower time frames. I will admit, last week, my last forecast, I was saying the dollar was looking weaker, but is still strong. We're going to show you guys what I'm talking about here in a second. But just a reminder, we still have weekly demand to get through in order to remain pretty bearish on the dollar. Yes, I will admit this week's price action has been pretty bearish on the dollar, very resembled here on this daily time frame. Last week, I talked about how this daily trend line was being respected. I had a few comments on my last forecast. Oh, the trend line's broken, dude. I actually was right here. The trend line's broken, dude. And to me, it wasn't. That's why we saw that big push up at rate pretty much on Monday when everyone was saying it was broken with this red candle here. Now, I will admit right now it is currently broken as we are below the trend line. So in my opinion, this is definitely, a bearish sign on the dollar. We still have 2 hours left for that candle to close. So anything can really happen. However, I'm going to draw some daily supply up above now, and this supply, in my opinion, is responsible for removing this upper trend line. So that is definitely a bearish sign. I'm not going to say it's super duper bearish because we've seen it so many times where price will just close below a trend line and fake out right back to the upside. So we are definitely going to monitor the DXY to see what's taking place. Now, on the 1 hour chart, things are a little bit more clear, and we can pretty much judge what's going to happen on the dollar based off of this time frame here. So what we could be doing simply, and there's actually a supply zone here that I missed, and actually, you know what, I'm going to change this, something like this. I think the supply was removed right there just for my records. It doesn't really change anything, but just wanted to have that for my records. So the downward trend line is holding. So 5-minute time frame shorts are going to be good on the dollar as long as this downward trend line is being respected. That's what we're going to be monitoring. Even if we break this trend line, we have a very good hidden supply zone above that took out a trend line that we easily could see a move off of. So for now, to monitor what's going to take place in the US dollar, we're definitely monitoring this downward trend line and this 1 hour supply level on the DXY to see what's really going to take place. And even if we get, another push up in the dollar, but right now we're kind of ranging. It's really not that great. And we actually have a pretty fresh, decent supply zone above at 98.53 that we would need to get through as well. And we definitely see a move off the supply. It could definitely be responsible, for holding up price. So it is definitely something we want to have our eye on right now. So again, I'm not super bearish a dollar. If we can break these lows here and create a 4 hour downward trend line, that's going to be very bearish. If we respect the supply above, that's going to be bearish as well. Right now, my sentiment is definitely more bearish than not on the dollar, especially since we were breaking the daily trend line. But look, at any point with that weekly demands in control, we could see the dollar begin to skyrocket again, and then at that point we will have to monitor the 4 hour supply zones and the 1 hour trends. Alrighty, on to the forecast for the Euro US dollar on the weekly time frame. Starting with that first, we do have that weekly overall trend to the upside. That's what makes this a little bit confusing on the euro. We're going to go down to some of the lower time frames here first. I was saying this last week. We were waiting for price to break above the high, and we did, and we saw another reaction off this daily supply. Again, this supply was very tested for the second time, so I was a little not surprised to see a move off of it, but as we got a pretty decent second move off of this supply zone. So with this supply and control, we could expect to see some weakness in the euro. It's going to depend on the dollar as well, obviously. And obviously, if we continue to push down the dollar, the euro is going to break this supply. So it'll be interesting to see what takes place. And we just did another donation to my local hospice charity last week. Thanks to you guys who are continuing to watch these videos, because all ad revenue is donated to my local hospice charity. So again, I appreciate you guys. So make sure you hit that like button and subscribe so we can continue to get these videos out there and get more donations. Much appreciated, guys. It means so much to me. So daily demand zone down below. If we push down to that, we definitely could see some hesitation, even a nice move off this daily demand zone on the Euro US dollar. And things are a little bit more clear on the euro here in the lower time frames. We have a very good supply zone right now in control. I know one of the members in the group actually got a trade off the zone. Obviously, they would have been stopped out if they were at break even for now, but a nice move off that zone for now. The zone is tested, so take the zone with a grain of salt. However, it's a decent zone that removed a trend line, so I like it for a potential move to the downside. So if you are looking to day trade, I think 15-minute time frame shorts are good. as long as this supply zone is being respected. So as long as this supply zone doesn't break above, we could be looking for the day trading shorts right now. I think that's completely a reasonable thing to do if you want to view it that way. Now, if you have a bullish mindset on the euro, I get what you're saying. And I mean, we have a beautiful 1 hour trend line to the upside right now. I would pretty much ignore this 1 hour supply. This 1 hour supply is basically just the overall 4 hour supply. So if you are bullish the euro, we have two options. As long as this trend line is holding, 5-minute time frame longs are fine. Because if this trend line holds, we're going to break that 4 hour supply. And save me the slack. So I used to get comments, oh, you're just saying long and short. I'm really not. I'm just giving both perspectives. So if I was bullish on the euro and I wanted to get in long, let's say you think there's no way we drop from that 4 hour supply, Kevin, you're totally wrong. That's reasonable. If you are bullish, what we need to monitor is this picture perfect trend line to the upside. As long as the trend line's holding, we could be looking for longs, like I said, on the day trading time frame, specifically the 5-minute chart. Now, if we remove this supply, we will have a demand zone right here, and I will have that for the members and myself, and we could be looking for a potential long trade off of that 1 hour demand zone. Let's say we break this trend line, right? Boom. At that point, we need to hold off on longs and trading until, so basically we're not trading within this whole gap until we can hit this demand zone down there. Then we could look for longs off of that demand zone. So again, guys, any questions, do not hesitate to ask. I will respond to every single comment that you guys leave. Alrighty, on the forecast for gold, absolutely killing it on gold lately. Nice move to the upside this past week. To me, looks like we are going to all-time highs. Obviously, anything could happen, especially when we're floating around the highs. And one reason I'm expecting gold to continue to rise is for this. If you look here, a very obvious, clear point of liquidity. Tons of stop losses are up here, and in my opinion, that's what we are targeting right now. So it's very possible we see a nice push up, maybe break the all-time highs, trap all the breakout traders, and get a nice healthy pullback on gold before we really take off. I am long-term bearish on gold. I would put all my money down that in 10 years, gold will be much, much higher than it is today. Even in the 4,000 marks, that would be my guess. So my long-term bias is to the long side, and that is based off of my years of fundamental research on gold and inflation. So that is what I think is going to happen on gold. But in the midterms, I think we will be targeting that liquidity. So we want to be favoring longs. I've been telling everyone to get in long this entire time pretty much, and that's why we caught this beautiful trade from a couple weeks ago or 2 weeks ago, and I pointed that one out last week in the forecast video. So beautiful trade off that 4 hour zone. I'm not saying we caught this whole move, right? But obviously an amazing move off of this demand zone. So how do we go ahead and trade it now? This trend line's pretty much irrelevant at this point, but we still have a very nice trend to the upside. Not only that, we have a very good demand zone that removed a very significant area of supply. This supply zone was a very good supply zone because it was basically the origin of this entire move down that broke many trend lines and many areas of buying here. So it was a very significant area of supply that was just removed on Friday here, and that left us with a pretty clean looking rally-based rally demand at 34.16. So if we do get a pullback down to this 4 hour demand zone, I think it's a great opportunity for a potential long trade, again, to target that liquidity and even get a nice position to potentially push to all-time highs. Even if we get a massive pullback on gold, I would welcome that because everyone's going to be bearish on gold. Everyone loves hating on gold and loving on Bitcoin lately. So if this crash does happen, we have a beautiful 4 hour demand zone sitting right below at 3,300. That's a great dip buying opportunity below all this liquidity. So I welcome that. I am not saying that's going to take place. I don't see any evidence for that taking place. I'm just letting you guys know if we get that pullback, we start breaking through demands, that's fine. We have a very good looking demand zone down below that I would treat as a very good dip buying opportunity. Now, on the 1 hour chart here, we also have a beautiful 1 hour trend line to the upside. So as long as you are bullish, and as long as this trend line's holding, I think 5-minute time frame longs are going to be completely fine, again, to target that liquidity that I was showing you guys on the daily chart. So for now, it is longs all the way on gold, guys. I don't see any reasoning to short. You guys know I like to point out both sides of the equation. Right now, I don't see any shorting opportunities unless we can break some trend lines and break some demand zones. So for now, we want to be looking for dip buying opportunities just like we got a couple weeks ago at that 4 hour demand zone. Alrighty, so on to the forecast for the USDJPY. Not a lot to go off of on the weekly time frame, but the liquidity down below, we could be targeting that. It is definitely possible, but this is just an example I wanted to show you guys of there's really not much we can go off of this. It's not like we have, you know, a demand zone down here in control. We can say, look, buyers might be stepping up here. There's really not a lot to go off of this weekly chart, even on the daily time frame. Look at this. I mean, it couldn't be more clear. We are sitting in the middle of supply and demand. This is how I view the markets. You can view the markets any way you want, guys. This is just how I view it. Right now, we are basically at equilibrium. These will both represent decent buying and selling opportunities. If you're bearish, the USDJPY, this is probably where you want to build your position. And if you're bullish, the USDJPY, this is probably where you want to start to build your position as well at a nice daily area of demand. Now, if you're not sure what direction we're going in overall, like it is possible we only see a small move off this supply before breaking it, just like it's possible we see a small move off this demand zone before breaking it. So it's always best to practice aggressive trade management if you don't know what direction we're going in. But look, right now we are sitting in the middle, and that is why on this 1 hour trade, I didn't get this entire move, but we did catch a beautiful liquidity trap demand zone trade at this trade. Boom, picture perfect, called out in the daily market breakdown video, which are forecasts that I release every day for the Diamond members. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z, covering everything you need to know on supply and demand trading, the Sunday strategy Zoom session where members submit homework, and it's an interactive 1 hour call where we go over all of your homework and every trading related question. Private access to myself inside of our private Discord group where I answer all of your trading related questions. And finally, the Sunday live stream forecast where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately. Absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. So again, I did not get this entire move, guys, because I was being aggressive with my trade management because of the fact that we did not have a daily trend. If the daily trend was up like that, then I might have not have, you know, been out of this trade early. Like I might have got this entire move. Obviously would have sucked just having your entry still here and then being break even, right? But that's why you always like to take profit. But I'm saying I would have got a bigger move if the daily trend was kind of on our side. So how do we go about and trade the USDJPY right now? Well, we do have a couple good 1 hour supply zones. These supply zones are both responsible for removing this upward trend line. So if you are bearish to USDJPY, we have two supply zones above. We definitely could see a move off of these supply zones at 147.69 and the one above at 148.03. I get questions all the time. What do I do when there's a level on top of level, Kev? Look, there's so many options. You can literally take both trades and just let your risk reward play in the long run. Maybe this one loses. Maybe this one loses as well. You're down 2%. Maybe this one at the top, maybe that's a winner. You can get a 3-to-1 trade. Now you're up 1%. So you can just take both, let your risk reward play out in the long run. You can take both, but maybe be more aggressive with this trade. Maybe only look for a 1-to-1 or be more aggressive with moving your stop to break even. And then maybe at the zone at the extreme, maybe you could look for a bigger trade. You can only take the one at the extreme. That'd be fine. You can only take this little hidden supply zone. It's really up to you and it's up to your testing. In my opinion, I really like this supply here. It's a little hidden zone. We definitely could see a move off of it, but if not, that one is above. And I mean, if you want to view this as another liquidity trap, we have a clear peak above here with the supply zone sitting above. So it's definitely an area we could see a move off of even at the top. If you were bearish, I'm actually going to tighten that zone up just a little bit. So a couple good zones here. Another option, if you're day trading a 5-minute chart, you could just look for confirmation in there, and that might save you from a couple losing trades. That'd be completely fine. So a couple nice zones there. On the USDJPY and on the 4-hour time frame, I really like the chart here as well. This demand is very tested. We got 1, 2, 3, almost 4, or almost 5, basically 4 to 5 touches off this demand zone. So it's definitely not an area I would feel comfortable getting along at anymore. However, if we remove this demand zone, that's going to be very significant. Why is it very significant? Because the demand is extremely tested, guys. That is why it is significant. So if we remove this demand, any supply there is going to represent a pretty good dip buying opportunity, in my opinion. Now, if we do push up to this resistance area here, I want to see another reaction off this resistance to prove there's liquidity here. That would make me feel better about the supply zone sitting above at 148.47. So I want to see liquidity reacting off here again to create that resistance trap with the supply above is going to represent a pretty good shorting opportunity, in my opinion, on the USDJPY. And look, if we start to remove these zones, then, you know, I think longs are reasonable. But for right now, I'm really only seeing shorting setups here on the USDJPY. On to the forecast for the GBPUSD. Very, very tricky top-down analysis here. So let's walk through it. So on the weekly time frame, we have not only a weekly trend, but we have a weekly demand and control as well. And that is why we saw the move from here to here, in my opinion. So it is definitely looking bullish, at least on that time frame. However, on the daily chart here, it's a little bit of a dilemma, guys, because we don't really have a trend. Not only that, we have a daily supply in control. So the most bullish sign would be actually removing this supply. And for anybody who's new, we called out this supply zone. You can go back and watch my forecast. This supply zone was completely called out ahead of time. So if you're following my channel, that's what we do here. We call out zones ahead of time. We don't just do hindsight analysis like a lot of these people. So nice supply zone here. If we remove that, that's going to be very significant because we've gotten 2 moves off of this supply zone, and that would kind of prove to me that that weekly demand zone down below is holding, right? So that's what we're going to be watching the next couple weeks here to see if we can really remove that daily area of demand. A little bit tricky, but that didn't stop us from catching a beautiful demand zone setup here on the pound. Absolutely picture perfect. Another liquidity trap, pretty much not as good as the USDJPY one, but definitely liquidity trap and a beautiful move off that demand zone. And look, we keep it real here. Another demand zone here, absolutely failed. This demand zone was a little hidden rally-based rally, absolutely failed. It was almost like it wasn't there. And that is the reality of trading, guys. Sometimes you just got to let your risk reward play in the long run, right? We do take losses. Let's say you got a 3-to-1 off this trade. Now you lost this trade. Congrats, you're up 2%. Even if you lose another trade, you're still up 1%. You lose another trade, you're back to break even. By that time, you'll probably win another trade, right? So again, beautiful setup off the zone, called out in that daily market breakdown video for all the members. Absolutely picture perfect. And then another failed zone. So what I'll be watching on this 1 hour chart, since we don't really have any new zones, if we break this high, that will give us the ability to draw a trend line here. Then 5-minute time frame longs are going to be completely reasonable, in my opinion. There's not really any new zones here that I'm seeing. Look, there's a great little trap zone down below. It's a 1 hour zone. It's kind of a random zone. If you just look at it, it's just kind of random. It's taken so long to pull back into it. I don't love it. But what I'll be watching out for is if we can get another reaction off this liquidity area down here. So it's a very clear liquidity trap that was formed here. Got a reaction off of it there and another reaction here. So if we break this demand zone down here and we react off this liquidity area, then I like this demand zone. For now, it's just a little bit too much of an older zone for me to just be buying this. And if you are, I'd be very aggressive with profit taking. I'd be looking for like a 1-to-1. Anything more than that would be great. But again, we want to see a reaction off the support to prove to us that there is support trap there with stop losses below, so we can buy the demand zone where all of the stop losses is. So that is my analysis on the pound. A little bit confusing, guys. Again, any questions, leave them in the comments down below. Watch out for a 4-hour trend. Watch out for a 1 hour trend. Right now, we don't have any of it. So we're waiting for 4-hour trends. We're waiting for 1 hour trends to kind of give us a direction to be day trading in. If not, we want to be looking for demand zones down below. Alrighty, on to the forecast for the USDCAD. We have a trend line still being respected here on the weekly time frame. Not only that, we have a weekly demand and control, but I mean pretty bearish weekly candle print here. So it looks like we could be headed down to there. Definitely a little bit of evidence, not the best evidence I've ever seen, right? But it is definitely a sign. We have definitely seen a pullback. It's very visible here on the 4-hour time frame. We had a beautiful 4-hour trend line that was very cleanly removed right here. And when that was removed, we are left with 2 supply zones. So it's another level on top of level kind of dilemma here. Honestly, both of these zones are very good. They check our criteria of having an explosive move. The basing is great. So honestly, I don't know which one of these ones is going to be the better zone. They're both great. So if you are bearish, these are our supply zone short trades on the USDCAD. And look, if you are bullish, we are basically just waiting for these to be removed, right? We're not going to be getting in long with no demand zones. If we remove this supply and we are left with the demand zone, there's our buying opportunity. We just don't have that right now. All I'm seeing, at least on this time frame, are shorting opportunities. Now, if you want to get more aggressive with your entries, we do have a nice 1 hour downward trend here. So as long as this downward trend line's holding, I think 5 minute time frame shorts are going to be completely fine. So it's possible we get a actual touch off the trend line. And again, 5 minute time frame shorts are going to be completely fine. If we remove this trend line and we have a 1 hour demand zone there, that is going to represent a buying opportunity as well. That buying opportunity could be better because again, we have that weekly demand in control and a weekly trend line in control as well. So the demand zone that removes this trend line is going to be pretty significant in my opinion. We have a little hidden drop-based drop here as well at 1.38, kind of a small zone, so might want a wider stop because it could be possible we break above the zone because it's kind of a smaller zone. So a decent supply zone there as well on the USDCAD, but mostly I'd be focused, again, day trading short the 1 hour downward trend line, and then after that I'd be mostly focused on those 2 4-hour supply zones on the USDCAD. Alrighty, on to the forecast here for the Aussie US dollar. So very interesting daily chart here. This downward trend line is currently still being respected, at least how I view it, which I do think is pretty accurate. It is definitely looking like it's going to break the next candle. So we'll see what happens on Monday. So it's definitely, I'm not saying, wow, this trend line is very being respected. I'm just saying it is technically still being respected. However, it's not looking great. I will admit that. Very interesting supply zone above. We've talked about it before. Barely hit that supply zone. Usually in this instance, I like to make the zone a little bit bigger. The issue is that the zone is already big, so I don't really want to make it any bigger. So this is definitely an area I think we could hesitate at. I definitely would be shocked if prices immediately spiked above the supply. I mean, it is possible. Anything is possible. If that does take place, it's probably some crazy thing that Trump did or whatever. I have no idea. So it's definitely a possibility, guys. It's just not something that I would be expecting, right? Because it is a fresh supply and it's a decent move that broke a trend line, or it's more of the origin of the move that broke the trend line. So if we do push above this trend line, we have a supply zone that we could see some bearish price action at as well. I really like the 4-hour chart. We're pretty much going to be focused on that for today's analysis here on the Aussie US dollar. And if you guys do want help with your trading psychology, which is arguably it's one of the most important, probably the most important aspect of trading, check out not only my podcast, but I just made a YouTube channel for it as well. The Stoic Trading Psychology podcast, guys. I'm talking about trading psychology, many tips, trying to keep things very realistic and try to give the beginner traders actual sound psychology trading advice. And I'm not promising $100 a day and $5,000 into $500,000 like all these fake gurus are doing. So if you want actual real advice for trading psychology, please check out my podcast. I think you guys will really like it. I've gotten much good feedback on it. So very interested to hear what you guys say about the podcast. Check it out and make sure you subscribe to the new YouTube channel as well. Sorry about that. Moving on the 4-hour chart, we have a picture perfect trend line here. As long as this trend line's holding, guys, 15-minute time frame longs are fine. However, something to consider is we do have a supply zone in control. Why I don't love this supply zone too much is it's because it's a reaction off of a previous supply zone, which we did call out in the membership. Just pointing that out. I'm not going to pull it up, but we did point that one out in the membership as well. So we already got a trade from this area. However, when we got a reaction off this supply, we broke an upward trend line, leaving us with another supply zone. And we are about to approach that supply zone. So if you are bullish, and if you want to get along on a 50-minute chart to trade with this trend line, I personally think being aggressive with profit taking makes sense because we definitely could see a move off of this supply zone. So if you're getting in long here and prices up here on a 50-minute chart, I think locking in profits would be fine, or at least moving your stop loss to break even or taking 80% of your position off is reasonable because we are about to approach a supply zone which we could see a move off of. But look, as long as the trend line's holding, I think the longs are going to be fine. And if we break through both of these supply zones, any demand zone there is going to represent a pretty good buying opportunity. So for now, if you're bearish, that supply zone, it could be good for a potential short trade. It is counter trend to this 4-hour chart. So if you want, you could be looking for a 50-minute time frame confirmation in the supply. That'd be reasonable. And if you're bullish, the trend line here could hold. So I think looking for longs would be fine. And if you want to play it safe, and you just want to look for shorts in the supply zone, that's fine. And if we break the supply, then I think hopping on longs with the trend is fine. So any way you view it, any shorts here are aggressive, I will admit, because it is counter trend, but it is something that we could see play out. Now, let's say we get a deep pullback on the Aussie. We have not only a great demand zone down below that broke a trend line. I mean, look at the move away. Absolutely picture perfect. Basing is very neat as well at 0.643. Interesting enough, we have a lot of liquidity down here with a even better demand zone sitting down below. So look, if we do pull back all the way down here, I think it's a great dip buying opportunity below all this liquidity that we could see a larger move off of. So this demand zone could be good for a small 1-to-1, 2-to-1 trade. This down below, I think that's where the bigger move could be taking place. And our other options for long, like I said, if we remove these zones, we want to be watching out for the demand zones that remove it, because it's going to be very significant, because it's very proven areas of supply here on the Aussie US dollar. Alrighty, on to the forecast for the USD Swiss. We have a very old weekly demand in control right now, and in my opinion, that is why we have seen the USD Swiss kind of rally, at least, maybe not rally, but at least hesitate for sure. But obviously with the dollar weakness, it looks like we could be pulling back into this weekly demand. So just wanted to give you guys kind of a higher time frame approach here. I really like the 4-hour and the 1-hour chart. It is very, very clean. So right now, we have a very nice 1-hour downward trend. This supply zone respected beautifully like 4 times, absolutely picture perfect. So any move like this, where not only if you remove the downward trend line, but the supply zone, any demand zone there is going to represent a very powerful zone, especially since the supply zone was proven 4 times. So it's going to represent a very good dip buying opportunity if we can get that pullback and to the zone that removes it. So that's something I'll be watching out for. For now, all I see is a very nice downward trend line. So 5-minute time frame shorts are great as long as this downward trend line is being respected. We do have a fresh supply zone sitting above. That was the origin of this entire move down. So at 0.806, that would be our supply zone for potential short trades if you are bearish. You could also be viewing it on the 4-hour chart. I think it's very clean as well. We have a very nice demand zone sitting down below. It is kind of an old zone. It was created back in July, so it's really not my favorite situation. What I would actually prefer to see for these old zones is something like this, where we can create some sort of liquidity trap here. Then I think that zone becomes even higher odds. So if you are short, like I was saying, we actually have an updated trend line here as well, my bad. So if you are looking for shorts, like I was saying, makes sense because you want to be trading with the downward trends. If you are day trading short, our profit margin is simply down to this 4-hour demand. You can simply just take full profit at this demand zone, that'd be fine. Or you could just scale out of your position, move your stop to break even, bump your stop up, take 80% of your trade off. So many options. I'm just pointing out this demand zone because I think it's an area we could see a move off of for sure, especially if we create liquidity before the zone. So it's basically right now our profit margin is measured down to this 4-hour demand zone, and that it's really that simple. Now, if you were bullish, again, we want to wait for these trend lines to be removed, hopefully have new demand zones down below. And like I said, this could represent a good dip buying opportunity as well. We have a very good supply zone above as well. And I like the liquidity before it. I want to see another reaction off this liquidity first to make it higher odds, but it's a good supply zone nonetheless. Alrighty, last but not least, we are on to the forecast for crude oil. A little bit of a dilemma here as we have a weekly downward trend. However, we have a very powerful weekly demand and it's in control. And in my opinion, that is why we have seen oil rally the last couple of weeks. So maybe not weeks, but you know, it's been pretty good the last couple of days, I would say. The daily downward trend line, however, is still kind of holding up price. I think as we approach the trend line, the sellers started to take in control, and that is why we saw oil start to push down. Since the weekly demand is in control, we are actually expecting this trend line to break. Now, my analysis is not 100% correct. I do take losses. I could be completely wrong. You can go back and watch all my forecasts and compare it to the charts. Some of them are going to be right. Some of them are going to be wrong. I could be wrong. But however, when we have a weekly demand in control, we kind of have to go with that, and a weekly demand is stronger than a daily downward trend. So we are actually expecting this to break. We will have another supply zone above to get through as well at 69.91, but this is what we are watching. This is going to be our signal to tell us if that weekly demand is really going to hold or not by breaking this downward trend line. So that is what we will be watching. That's what I have been watching out for. We haven't got the break yet, but that's what we will be watching for basically this next couple weeks. Not a lot of trading decisions right now on oil. If you want to get aggressive with longs, that's fine. It's really, there's a time to be aggressive and there's a time not to be. The time to be aggressive is when we have higher time frame zones in control. We have a weekly demand in control. Typically with a weekly chart, we want to be entering on an H4 time frame. Now, well, that's why I'm calling it aggressive. So the 1 hour chart, we have created a 1 hour upward trend. Now, if you want to get aggressive, 5-minute time frame longs are good as long as this trend line is holding. If we break the trend line, that's fine. We hold off on longs here until we can hit this 1 hour demand zone. Then we hop on longs again at 64.29 here on crude oil. If you want access to the full Forex forecast, make sure you subscribe to the Diamond membership where you get access not only to my daily chart analysis, but also my daily forecast where I forecast basically like this forecast, but every single day for the members. It also comes with the 38-page PDF, which is your guide for trading as well. Make sure you subscribe, hit that like button, and I'll see you in the next video.